Welcome to the Truth About Real Estate Investing show. And can we do away with all the daylight savings business? I mean, I wake up in the dark pretty much every day anyways. And I drive home. Now I'm driving home in the dark. But at least we can walk our kids to school in the morning in the light. I hope you're all adjusting better than I am. I made the mistake of going out on Friday night till the early hours of the morning on Saturday morning with a bunch of guys for a guys' night out with my Hambundance group. No need to adjust your audio. My real estate buddies group is called Hambundance. It's a word mashup of Hamilton and abundance. It's a play off the elite mastermind group called GoBundance that I was too cheap to join. So my buddy Charles Waugh and I formed Hambundance with a group of other successful real estate investors like James Moneybags Mags, Andy Tran, Roger Auger, Kevin my mortgage guy, a builder, one of my most successful clients, John. We try to meet once per quarter for 24 hours of fun. That's all the time we can afford away away from work and away from our families. So it has to be 24 hours. The Friday started with Pew Pew. That's an indoor shooting facility with airsoft guns. So we'd move through obstacle shooting ranges, and we're being timed. So with a group of competitive A-types, that can be a lot of fun. Thankfully, no one got shot like last time when we were in Vegas. That's a story for another time. What happens in Vegas stays in Vegas. Next is the commute to dinner, because getting around downtown Toronto takes forever, like it always has. That's why I use the word commute. We dined at a restaurant known for serving game meats, a place called Antler. They got famous because, as a tongue-in-cheek joke on their sidewalk chalk sign, they posted, quote-unquote, venison, the new kale, end quote. Well, animal rights groups did not think that was funny at all, so they proceeded to protest outside the restaurant on weekends. So keep in mind, folks, this is a small, local, individual, one restaurant. Like, the chef, butcher is the owner. Like, small restaurant. This isn't factory farming. It's nothing like that. So anyways, but animal rights activists would protest this restaurant regularly on weekends. And the restaurant made international news. The owner of the restaurant was even invited onto the Joe Rogan podcast to share his story. And ever since, celebrities from all over the world stop in whenever they're in Toronto to support Antler, the restaurant. We didn't see any celebrities, but we ate like them, considering the size of our bill afterwards. I had the elk tartare and venison ribeye, which tasted nothing like kale. I should ask for my money back because it was nothing like the advertising. From there, it was drinks at one of our friends' condos in downtown Toronto, and then a rooftop patio with the CN Tower in the background. Needless to say, the day and the night were legendary, while pricey. Thankfully, it's a business expense for me since we're talking real estate all night. While standing on the rooftop of the patio with Andy Tran, I couldn't help but think about how much things have changed and how much hasn't changed since Andy and I first stood on a roof together. The year was 2010. Andy was the house buyer at the time. I was his realtor. Him being a home inspector, he was inspecting the property himself, which was a bungalow that he purchased conditionally. Back when we could negotiate and get conditional on inspection. Well, we were inspecting the house, and I was a new agent at the time, and I was keen to learn. So I was happy to be following Andy around, who's a friend. And Andy, being the home inspector, he got a ladder out and got up on the roof. And me, while dressed business casual and dress shoes, I followed behind him on the ladder. So so we're both now on the roof. Andy turns around and looks at me as if I have two heads. I ask, what? Andy shares that he's in around 1,200 or 1,500 home inspections that he's done. I was only the second agent to ever get on the roof with him at a home inspection. That was over 10 years ago, standing on a bungalow he bought for just over $200,000. That's now worth about 4 times that. Quick pat on the back. I'm a pretty good agent. Fast forward to today, we both have a lot more laugh lines and gray hair while sipping ridiculously expensive drinks at the time one of the most exclusive restaurants in the city. Life can be good, and it's even better when you're on a journey with like-minded friends, good friends. We started from the bottom, and now we're here. I hope you all out there are taking the opportunity to grab some friends. Be safe, do what's comfortable for you. My friends and I are all fully vaccinated. So go have a good time and maybe get a lot more sleep than I did. On to this week's show. My friend Elizabeth Kelly is joining us to share what she's been up to the last 2 years since she's been on the show. Elizabeth was a paid instructor. So she was a hired real estate trainer, and she's trained hundreds and if not thousands of investors in many of the real estate strategies, raising capital, rent to own, wholesaling, buy and hold, etc., etc. Many of the influencers today have been her students. So thankfully, because I'm old, I've been around for a while. So thankfully, I'm able to reach out to some of the the OGs of real estate and real estate training. Elizabeth has done over 100 rent-to-owns as investments for herself. She manages over 400 doors. Most importantly, she's discovered what she enjoys most, and that's helping people via coaching. That's why we get along so well. We both enjoy helping people. She's on the show today to share many of the lessons and hurdles that newer and older investors both make, and what market she shares what market she's selling her properties in. It's probably the first time she's publicly sharing it as well. So if you're looking at the same market that she's looking at, you may want to ask why she's selling while all these other investors are buying. And the lessons in investing in a mining town. Elizabeth and her husband Emmett, they both invest in a resource-based town. So it's actually not what I expected. So she shares some of her best practices, what kind of renovations, what kind of price points to target folks in a mining town. So get your pen out, take plenty of notes, and please learn from Elizabeth's lessons and enjoy the show. Hi, Elizabeth.
Hey, Erwin, how are you?
Busy.
Yeah. Keeps you out of trouble, though, right?
Gets me into a lot of trouble, too. But what's keeping you busy these days?
Well, we've been an essential business, so we just, we've kept doing what we've always been doing. Mm-hmm. So I started a coaching business, actually, right before the pandemic. So I think you were my very first podcast. I was really honored. Mm-hmm. Yeah, so January 2020, I officially opened the doors on my coaching, and I've been busy with that, helping people figure out their way, navigate their way through their real estate journey, and that's been amazing. I've enjoyed every moment of that experience. Right. And continuing to do property management and keeping busy with that too. There's lots going on in Northern Ontario. The price of gold's going up, and more investors in town as they're unable to find, or struggling, I guess, to find deals that make sense down here. So it's I've been really lucky. We've been very fortunate. I know there's a lot of people who've suffered a lot over the last 18 months. So.
And so you're one of those folks that, have 4 to 6 properties and then you started a coaching business?
No. Not that I would judge, but no, we've been investors for 15 years. We have around 400 doors that we manage. And I've done just about every strategy in real estate, which I was sort of thinking back on. Sometimes that's a good thing, and sometimes it's not a great thing, right? Because you know a little bit about everything, but I find it's important to figure out what really makes you happy and to pick a strategy that really fits with your long-term goals. Like, there's a show that shows up on HGTV and suddenly everybody's into flipping, and it will work really well for some people, and that's amazing. And then for other people, they don't realize what that strategy actually looks like when you put it into practice. Or they might not be comfortable or know how to turn doing one flip into a scalable business. So there's a lot of, I believe anyways, as a real estate investor, that we need to take a step back in the beginning and make sure that we're being strategic about it, that we're choosing strategies that help us achieve our goals in the long run, that we aren't compromising or sacrificing our quality of life, our time with our family, our health and well-being, that none of those are going to be negatively impacted in our pursuit of, freedom, financial freedom, time freedom, whatever our goals are in real estate. I think that's probably one of the biggest things that I see, and it's a mistake that I've made too, where I say, well, in 5 years I want to be here, or in 10 years I want to be here, and you put your head down and you start grinding, and you pick your head up in a couple of years and you go, what's my quality of life? Like, what am I doing on a day-to-day basis? I'm working 14 hours a day. what's happened to my health while I've done this? What are my friends and family doing or going through? So I think it's important. I think balance is important, if that makes sense. That was a very long answer for a short question, wasn't it?
It's a long answer. It's a long answer, but I like learning, so I'm all for it. And you mentioned how you've done basically every strategy, and obviously you didn't do that over 30 days or 90 days. You did that over years.
Yep.
Right. And I'm not that different. I've done many strategies.
Yeah.
And it's just I like to try things and see if it works for me. Right. Like
Yeah.
your investing is very different than mine. Like I invest within an hour drive from my home, and even before we were talking recording, like there is an investor where new construction condos writes for them.
Yep.
Right. And then yourself, you're on the far end of the spectrum in terms of active real estate investing, right? And then again, we have to all make our choices. What suits us? Because there's no one shoe that fits all.
No, and I think that's the beauty both of being human and of investing in real estate is the fact that our journey could and should look different from everybody else's. And I think the challenge, but also the opportunity that's really come up over the last, sort of 5-10 years. When we started out in real estate, and my husband and I joke around because, we would go to the realtor's office and sign all the paperwork, or, we'd have to fax it over, like everything had to be done in person. And now, we hire people and we work with lawyers and we work with realtors and everything else, and they're hours away and everything's done online. And, most of our interactions with people, particularly over the last 18 months, have been over social media. So, what everyone's journey looks like is different, and our perception of other people's journey is really based on the information that they choose to share.
Yeah, social media. It's not all there.
Yeah, and I think it's important, if you want to have results that give you the life you want, I think you have to be honest with yourself right from the very beginning. What is it you want to accomplish? What is it you want to achieve? What is it you want your life to look like? And once you're clear about what you want your life to look like, then you have to do your research and you have to talk to people and you have to, read books and listen to podcasts and figure out what strategies are going to help you get to where you want to be. My husband, he loves multifamily buildings, thinks they're amazing, would buy them all day long. And that just doesn't resonate for me. I have to be honest. It's, as someone with a background in working for not-for-profit, in working for a number of charities, I need to feel good about what I do at the end of the day. If I don't feel like I've had a positive impact on somebody's life in some way, shape, or form, then to me, that's not a great day. And I think that's why coaching has become so fulfilling for me. Yeah,
it's funny because teachers often get there's that saying, those who can do, those who can't teach.
Yeah.
Is that accurate in your case?
No, it's not super accurate for me. I really believe that teaching is probably the biggest opportunity that I have to share, the mistakes that I've made, the knowledge that I've gained. So many people, when they're starting out in real estate, they consume huge amounts of information, but a lot of people are lacking the framework in terms of how do you put it together? How do you decide, okay, this piece of information is relevant for me, or this is something I need to know versus this, doesn't apply to me or to my particular situation, or this isn't information that I need at this particular moment in time. I'll put it away for the future. And I think people are literally overwhelmed. And to some degree, social media contributes to that. I have a client who, her journey is different than some of my other clients. And she said to me the other day, she said, I feel like I should be farther ahead than where I am. And I said, but we have to be kind to ourselves. We have to say, yes, we have our goals. Yes, but, we all have other things, whether it's family, whether it's illness, whether it's, a 9-to-5 job. There needs to be a balance. Like, we can't sacrifice our health in order to have, 2 properties by the end of 2021.
Yeah, and to your social media point, I remember seeing on the news an investor had their Airbnb tenant so it's called short-term rental tenant because I don't know which company they're using. A short-term tenant was staying beyond the end of their term, what was like a week or something.
Yeah.
And they stopped paying as well.
Yeah.
And then they called the cops, and the cops like, we can't do anything. This is a landlord-tenant dispute. And like, no, this is not that.
Yeah.
And so the investor was interviewed on the news, and then I went and searched her on Facebook and asked if they wanted to come on the show.
Yeah.
And they didn't want to, because they're willing to go on the news, but they didn't want their peers to know what happened to them.
I think that's so sad, and I think that's part of the image that we sort of feel compelled to create on social media about everything being wonderful and about never making a mistake. And I look back and I go, I learned more from my mistakes than I ever did from what turned out correctly, because when things turn out correctly, how often do you stop and look back and go, okay, what really worked here, and what do I need to replicate? And we can't always attribute a causal factor to our success, whereas you look at moments when you failed or moments when things haven't gone according to plan, and I think it in part comes back to the mindset that you and I were talking about earlier, where are we finite or infinite? And listening to this podcast with Brene Brown and Simon Sinek, it really sort of gave me the framework to be able to say, real estate, we're viewing it as a finite event. We're viewing it as a beginning, a middle, and an end. And I think for those of us who are serial entrepreneurs and who want to create this future for ourselves and our families, I think we need to switch more into the infinite mindset, where, we have teammates, we don't know who they are necessarily, but when we need people, our teammates step in and help us, invisible teammates, they call them. And I think it's important that we focus on what we want the outcomes to be and think about what made us successful and move towards what made us successful. I only want to make a mistake once, but that doesn't mean I'm not going to tell people what that mistake was, because the moment I try and hide my challenges, then I am no longer helping and contributing to the greater good, I believe. Does that make sense? Sorry, I got really out there on you, didn't I?
That's okay, because I might try to dig into it. You mentioned Emmett loves multifamily, but you don't have an interest in it.
No.
Can you dig into that? Because I have my own mental blocks around apartment building investing. So I'll just quick share is that based on my values, my investing will focus on creating housing supply.
Okay.
Right. So for example, if I buy an apartment building, I didn't create any supply. Right. So that's why it's not of interest to me. Why is it you are not opposed, but doesn't interest you? Is that the right term?
Yeah. It just. I think when we ran the numbers initially, we were counting on cash flow of this amount, and when we actually got into owning multi-units, we found a lot of challenges. We encountered a lot of challenges that we didn't anticipate. And my goal with real estate was always to be passive and hands off. I didn't, when we started, my goal was not, okay, let's self-manage 150 units and then let's grow to 300 units and then let's start managing for other people. That was never on my radar. It's something that happened. So when I look at what do I want it to be? I do want it to be passive. I do want to have my time freedom. And at least the way we approach multifamily is not what the experience has been, if that makes sense.
What's the lesson there? Because I'm sure lots of people, before we were recording, for example, we talked about how a lot of the teachings are the same. I've only been in the world since like 2008 in terms of consuming real estate education, but multifamily apartment buildings, that's been a consistent through time.
Yeah, and I know this is different than what a lot of people talk about right now. There's a lot of investors who are buying multifamilies and doing really well with it, and I think that's amazing. And obviously that is part of their journey. I'm just figuring out it might not be part of mine. I think the biggest takeaway from it, one of the biggest ones, has been hire a property management company you trust. A lot of the investors that I see struggling in the landlord groups are trying to self-manage. And when you have tenants who have access to information and access to free legal counsel the way you do in most of the provinces in Canada right now, you've got your hands full. And when you add in the emotional involvement piece with, these people are destroying my home, like I signed the lease myself, I interviewed them myself, and you've just got all these emotional components going in. And I think it leads to some decisions that might have been different if there was less emotional involvement. And I think that's part of it for me. If we had found a property manager who, we really clicked with and resonated with, and they saw things the way that we did, and they did things the way that we wanted them done, the way we wanted our tenants managed, I think maybe this experience would have been different.
Right.
But for me, I think my first, looking back, I started doing rent to owns 12 years ago. I think those will always be my favorite investment strategy.
Interesting. All right, we'll get back to that in a bit. So actually, no, let's stick with it for a little bit. Are you still doing rent to owns?
I'm on hold for a little bit right now. Right. I have some things that I'm sort of working on and sorting out. And, as a coach, my number one priority will always be my coaching clients and, whatever their needs are and what they have going on, what kind of support they need. But I know it will come back around, and I will be doing them in the future.
Got it. And to give some context to the listener, how many rent-to-owns have you done? It's a lot.
Yeah. So my partner Michelle and I, between the two of us, we were at about 100.
Just 100, eh?
Honestly, I love coaching about rent-to-owns, and I just get such a great. To me, it's an opportunity to help people help people. Yeah. So I don't feel the need to do it myself when I have, if someone approaches me for a rent to own, I have this amazing network of people that I can refer them to. It doesn't have to be me doing it. What I can do is work with people who want to do rent to owns in a really honest and ethical way, who want to set their, tenant buyers up for success. And I'm more than happy to refer people. And I think that's part of what resonated so much with the idea, for me, with the idea of these invisible teammates is, we sort of go through our life and we don't know who's on our team. So when we come across these amazing people that we can refer clients to or that we can refer investors to, it's such a gift to be able to help everybody grow as opposed to having this sort of scarcity mindset. So I think I'd rather train people to do rent-to-owns.
Okay. Yeah, we just had Rachel Oliver on the show about a month ago.
She's awesome.
Over 500.
Yeah. Yeah, she's a rock star. There's no doubt about that.
Yeah. And that's why Rachel and I get along, is our values are aligned in that, in the rent-to-own, who is the most vulnerable in the rent-to-own relationship between the landlord / investor, if there's a if there's a JV partner, and the tenant, right? It's the tenant.
Yes.
And there's a lot of rent-to-own businesses that kind of like set up the tenant to fail. But we won't get into that. That's not what we're here for today. But can we talk about how much teaching you've done? Because you were a hired teacher as well for real estate.
Yeah, I was a trainer for Rich Dad Canada for 8 years.
How was that?
I loved it. It was like it took all the pieces of my real estate journey and my real estate roles and brought them all together in one place. And it made them all kind of make sense for me. And I think that's probably one of the biggest things that real estate has given me. It's okay to be a real estate investor and not be like, I love real estate. And I think people feel this like compulsion to say, I love real estate, I live for real estate, I eat, sleep, and breathe real estate. It's okay if real estate is also a tool. The same as, stock hacking. And I know you love stock hacking, and I enjoyed your course tremendously, and that's definitely in my future as well. But for me, these are tools that provide me with what I need to be able to create the life that I want. And to me, those are different.
Okay, I have so many questions to ask. How many students do you think came through your programs, the ones that you taught at Rich Dad?
Thousands.
And big fan of Rich Dad Poor Dad, Robert Kiyosaki.
Yeah, he started the journey for just about I'd say if you talk to a room of, 1,000 investors, I think 900 plus of them are going to tell you that their journey started with Rich Dad, Poor Dad. And you can still go back and read that book and the fundamentals are there decades later.
And just as a disclaimer, I have no affiliation with Rich Dad Canada. This is not an endorsement for them. I don't even know who runs that thing. So who does run it?
In Canada, I'm not sure it's active right now.
Got it. So you've seen a lot of students.
Yeah.
You've seen successful ones. You've seen... actually, no. Let's go back to what you're saying about I love real estate. I don't know if I ever loved real estate.
Yeah. And that's okay.
And that is okay. I was golfing with a gentleman. He doesn't have kids, still pretty young, early 30s, mid 30s, whatever. And I say, and we're talking about real estate. And he's saying, I don't know if I want to be a real estate investor. And I'm like, you don't really have a choice.
What do you mean by that?
It's not something you can or can't. It's not something you can choose to not do it.
Yeah.
It's just a big mistake not to do it, right?
I think it's part of creating an overall strategy and an overall, we all want to retire, and it's just some of us start working on that retirement plan sooner rather than later. And some of us have shorter, the goalpost is closer than other people. Does that make sense? Yeah.
I think I should have used himself as an analogy, because I found out he used to play AAA hockey.
Okay, yeah.
I think those things cost a lot of money.
Yep.
So I should just push back. How do you think you're going to pay for that?
Yeah.
Right? What if your kid, I don't know, gets selected to play for Team Canada? They have to go to the Olympics. Right? How much is that going to cost? Right? You going to say no?
Yeah, with that kind of opportunity looking at you. I think, too, people have this idea of what it means to be a real estate investor, and they don't realize that it can look different for different people. I mean, there's people who are real estate investors who never leave their house. And then there's other people who are on a job site every day and, hiring contractors and building relationships. And, depending on the number of deals that you do in a year and depending on the strategies that you choose, you're the one who's, they say, we're living the decisions that we made in the past. So the decisions we make now are going to shape what our future is going to look like in 1, 2, and 5 years.
Yeah. As I was having the exact conversation with a client yesterday. He's like, how you been? And I always feel awkward about this. Not with clients, because they know how well we've done as real estate investors. It's like, we've all done really, really well in real estate. And then typical Canadian modesty is like, oh yeah, we got lucky. And then I go, well, no. We knew money printing was happening. We knew that immigrants want to be here. We knew that the government will continue printing money. We're going to have money. We're going to have... there'll always be lots of inflation. It just happens sooner than we expected. Yeah. But like you said, we set ourselves up for this.
Yeah. And so then the question becomes, as a real estate investor, when we started investing 15 years ago, we were buying stuff with 5% down. And there were investors that when I think it was 2010, they brought in the rules that investors had to put 20% down. And investors were throwing up their hands and they're like, how can this possibly be? And how are we going to keep investing? And this is ridiculous. And literally half of our competition got up and left the left the space. And, here we are 10 years later and, people are still investing, people are still buying, prices are still going up. It really, I find resiliency and resourcefulness are probably two of the most important qualities that a successful investor is going to have.
Definitely resiliency. A good friend of mine, Nick Karadza, always says, those who deal with the most shit. Damn it, I forget the rest of it.
I bet it was a good phrase. Nick has some gems.
Along the lines of those who deal with the most shit win the most in the end.
Yeah.
Right. I feel bad, Nick. Hopefully he doesn't listen to this show.
You can put this in afterwards, okay?
So I wanted to ask you about your experience working with students of real estate. So I think anyone who signs up for an education program should have expectations. And that's the hard part is I don't even know if anyone knows what the outcomes of students of programs are like. So for example, when I was a Ray member, it was what they would say from stage is like at a table of 10, only 1 or 2 of you are going to take action, right? If you took action, you're probably a pretty big winner. Even if you bought 1, 2, 3 houses, right? Even if you own your own home, that's a pretty good level of success.
Yeah.
But again, only 1 or 2 people are going to take action out of 10, right? What do you think? How do students perform when they take a program? Let's start with that, and then we'll dig into coaching.
Sure. Well, the first thing, I think a lot of people make the mistake of not doing enough due diligence before they choose either a program or a coach. So I think it's important to get a sense of, who is out there in the marketplace and what is their particular or unique niche, because I won't be a coach that would be ideal for everybody. And the same as, any of the large education companies, they're not necessarily going to be ideal for everybody either. So it's important that you at least know enough about what you're looking for and what circumstances or environment you learn best in, and then look at the companies to see what they're offering, and talk to former students. That's one of the biggest things you can do, is talk to students about what they learned and what their key takeaways were from this particular program, because some people will do better with hands-on, one-on-one coaching, and other people, they know that the larger companies might be more expensive, but they want to go because they want the networking opportunity as well. So it really comes down to fundamentally, what are your goals? What is your reason for this education, and what are you looking to get out of it?
Right.
Because a lot of the companies, having worked for Rich Dad, friends who work for Keyspire, clients and friends who have gone through, Stefan Arneo's Black Card University, like these are all companies that have impacted people's lives in major ways. I think if I had to look at, the students, I'd say most people, the reason why they don't take action ends up coming down to fear. And the ones who are able to figure out a way over, under, or around the fear of making a mistake, they're able to take action, and once they get the first one done, the subsequent deals become easier. But I also, think that a lot of people think that being a real estate investor means you must own apartment buildings, and it means you must have hundreds of units. And the reality is, you can be a successful real estate investor if you're buying, a duplex or a couple of duplexes a year, and you're just hanging on to them. Again, if you're happy in your job, you don't need to be planning to retire in the next 48 months. You can buy real estate and choose, a stable market, choose a market that is consistently over the last 50 or 100 years seen appreciation. And then, you put that, I know you bought houses for your kids, right?
Yeah, back in 2014.
Yeah. So I would imagine they have increased significantly in value in 2014. So as long as you're doing, as long as you're actively doing what you can to mitigate risk, you keep a reserve fund in case a tenant doesn't pay, or in case there's an unexpected expense. As long as you're running your numbers correctly and accurately at the beginning, and you're mitigating your risk as best you can along the way, check your insurance policy every couple of years. Make sure that, there's nobody out there that, like, you can't get complacent as an investor. Like, you still have to, check in and do your due diligence and pay attention to what's going on. But I think people have this idea that to be successful, you must have this massive portfolio, and you must have, you must hoard properties. And the question I asked one of my coaching clients a couple of weeks ago was, what would happen if, instead of doing, 7 flips or 8 flips this year, what would happen if you did 5 flips, but you made sure they were higher quality ones instead of taking everything that comes your way? And they went, really? And I'm like, yeah, absolutely. You're going to put the same amount of work in, but you're going to get a better return on it. And they went, okay. And now their business plan includes, 4 or 5 flips next year, not 7 or 8. So they've given themselves time and quality of life, and all they've done is be a little more selective. They've drawn a line in the sand, and they said, this is not what we're going to do. This is what we're going to do.
The benefit of a quality second set of eyes. I was going to say a second set of eyes, but I just threw in the word quality. Because opinions don't matter to me unless they're qualified. Right?
I think that's valid. That's good. It's a good perspective.
And you mentioned like fear. So if someone doesn't know how to run numbers, just run your numbers and bounce it off someone that you respect. Right? It's not that hard.
No. I had someone who approached me a couple of weeks ago, and she said, we have a couple of properties right now. She's like, we don't know what to do. Should we sell? Should we keep? What should we do?
Yeah.
So she hired me as a consultant for an hour and a half. And I sat and I ran the numbers with her. I looked at everything, talked to her about her goals, her long-term strategy. At the end of the day, I said, I'm not going to tell you what to do. I said, but if it were me, this is what I would do.
Yeah.
And we have this idea that we must always hold and we must never sell. and I just think that's such a fallacy. Because there are times where it does make sense to sell. If it's not serving us, if it's not, contributing to our cash flow and to our bottom line, if it's tying up, our ability and our access to future financing, like those would be reasons that I would consider selling. If we have a partner in it and the partnership's not doing well, then either replace the partner or sell the property. If we, and this comes back to finite versus infinite, if we view this real estate investing journey as, infinite opportunities, infinite possibilities, letting one property go doesn't mean anything in a negative context. Sometimes it opens up tremendous opportunities that are coming to us in the future by letting go of a property that's not performing or not serving us.
Mm-hmm, mm-hmm. Yeah, it's more common with my clients that they're selling just the properties that require more management. Mm-hmm. Or if it's a single family, that, for example, then they can't convert it to a duplex, and they'll sell those and buy something that they can convert, right? So there's always good reasons to sell. There's nothing wrong with taking profits. No one ever goes bankrupt by taking profits.
No, and I think you have to look at again, we come back to quality of life. So if you don't want to self-manage and you have a single-family home or a couple of single-family homes, you sell them, you take the profits, you put it into private lending, and you're still making a really good return, but you don't have any of those headaches. So I would take smaller returns for greater quality of life.
Now I want to talk about specific your style of investing. Actually, before we talk about Kirkland Lake, do you have any investments outside of Kirkland Lake?
Not at this time, no. I will. In the next 2 years, I will, but not right now.
Where?
I'm not I shouldn't say that, actually. We have a bunch of properties in New Brunswick.
Oh, I forgot about those.
Forget about those.
I forgot about the bunch of properties we own.
Sorry.
How long ago did you get in New Brunswick? I asked because it seems to be something that came up in the last year, where there seems to be more of a rush.
2010.
To get to, okay, it's that. Yeah, you were part of that rush then, weren't you?
Yeah. It's been challenging, to be honest, to be in New Brunswick over the last 10 years, and it's because the market's been really flat. And this is, I'm really happy to see the market pick up. I'm happy to see new investors and interest in New Brunswick. And this is, I think, one of those real things where, buying in a market like Ontario that's seen growth the way it has since 2008, it's been hard. Like, not everyone has made money, but most people have made money.
Yeah.
And I feel like, as a real estate investor, the real test for me comes, if a market isn't going up, can I still make money? If the market isn't going up, and the pandemic for some people has been that test. If my tenant stops paying rent, how am I going to get through this? What kind of reserves have I built? What's my fallback? What's my exit strategy here? So I'm not in any way judging anyone. I just know that New Brunswick has been more of a test for us than anything we've bought in Ontario. And we've bought in most of the provinces across the country over the last 15 years. New Brunswick has definitely been, I did rent-to-owns in New Brunswick in 2012. I did 6 of them, and we didn't do well on those. Did not do well.
Did you lose money?
Yep. Overall, yeah, probably. Yeah, I had one of them that went really poorly, and that probably took away any profits from the other ones. So what I learned, or my takeaway from that, was the importance of choosing the right market for the right strategy. Just because it makes sense to own apartment buildings in St. John, New Brunswick does not mean that the numbers made sense to do rent-to-owns out there. But I didn't know enough at the time. So I just went, okay, well, it works in Ontario, it works in, Quebec, and we've done them in, Nova Scotia and Newfoundland, and, we've done them in Alberta. I'm like, okay, so New Brunswick's going to make sense too. Nope. Yeah. It did not. But again, that's one of those things where I learned so much more, and I feel like it prepares me to be a much better coach because I can talk about, here's all the mistakes that I made.
Yeah.
So
and I've tried all the provinces.
Yeah. So
all the
please,
strategies.
as my client, please don't make those mistakes. And that isn't to say that, we start at the beginning of our journey and we say, okay, I'm never going to make a mistake. I mean, that's not realistic. You need to be prepared that you're going to make a mistake. But I think the difference, the way to overcome fear is to say, have I surrounded myself with the right people? Have I got people on my team that I can trust that are going to be looking out for my best interests? Are they, the right people to provide the information that I need? And I think probably if I had had a realtor at the time who had been a little more honest about what the market was doing, that could have been, and I'm not in any way blaming anyone other than myself for the mistakes that I made. But I think it might have been helpful to have someone who was like, well, you might want to reconsider that because I don't know that we can count on 5% appreciation a year here in St. John, New Brunswick on houses.
So there's a lot to unpack there, as with everything we've discussed. You said, so you took responsibility, which is funny because I think it's not funny. I shouldn't have said funny. I think somewhere around 75 to 80% of the population blame someone else. They usually blame whatever situation we're in. They blame someone else, and then the term is the locus of control. Where is the control? Is it with myself or is it outside of me? Right. So 75-80% of the population believes the control is outside of them. They don't control their outcomes. Right.
Okay.
I know we only have an hour, but I do the same thing. I take responsibility, but then just to speak my mind, like I tend to do, is not everything is under your control. Fair?
I would say circumstances are not always under our control, but our response always should be. And that's where I derive my control from, is that, we can't control a pandemic. We can't control, a variety of other factors, but I always have 100% control over how I respond.
Yes. I like that. Absolutely. It's just tough sometimes when you take responsibility and there's like nothing, it was out of your hands.
Yeah, it is. And sometimes it doesn't feel great. Mm-hmm. But I find that right before, my greatest moments of insight, right before, my greatest growth comes these periods where I'm, frustrated or I'm unhappy or I'm struggling. And that's when I reach out to my team, to my high performance coach. And I'm like, I'm struggling here. Like, can you help me see this from another perspective? And 9 times out of 10, when we ask better questions, we get better results. And that I found has been one of the biggest challenges. I didn't ask the right questions about the market in 2010 in St. John, New Brunswick.
Damn. Okay, so fast forward to today. Are you buying, selling, holding it in St. John's, New Brunswick? Because I'm sure there's some listeners that are looking at that market right now.
So this is interesting because this is a thing that I think a lot of real estate investors don't necessarily go through, or at least they don't necessarily talk about it. But I would consider the phase that I'm in right now repositioning. So I'm looking carefully at everything that we hold. I'm looking carefully at all the partners that we have. I'm looking carefully at the returns that we're generating. And I'm saying to myself, does this serve me and the future that I want to create? Mm-hmm. And if the answer is no, then I'm letting it go. Because what that will do is open up tremendous opportunities for things that are going to serve me and to help me create the life that I want.
Can I ask then what you're doing with your St. John's, New Brunswick portfolio then?
We will probably be looking at letting those go.
Natural question then is that if someone's looking to buy, how can they contact you?
We haven't quite figured, what that looks like and what the process is.
Your DMs are going to be full.
I know, right? And it won't be any unsolicited pictures this time.
This time. Pictures of offers over asking.
Yeah. I always love to hear from people. I do. I love hearing about people's journeys and about what people have learned, and I love connecting with people, and that's probably one of the biggest things I miss since not teaching anymore, is not having those 2-3 days where you're in the front of a room, and then on breaks you get the opportunity to meet so many different people and hear their stories and to learn about them. And I look at my Facebook, and so many I go back through, and I mean, you have Joel who works for you, who was a student. Like, I just have all these pockets of people everywhere, and that's, I consider that a real gift, just to have been able to connect with so many people over the years in so many ways. But yeah, people can message me if they want.
Keep it civil, folks.
Yeah.
Okay, a couple things I want to talk about. Let's talk about Kirkland Lake. So,
Sure.
We've had a couple guests on the show recently, and it's you kind of talked about it as well, like affordability is issues and as major issues, especially in Greater Vancouver, Greater Toronto areas, probably Montreal. Aside from that, probably not nearly as bad anywhere else. And in the pursuit of cash flow, a lot of people are driving further from city centers. Kirkland Lake, I think, would qualify as far from a city center.
Yeah. Probably take us about 7 hours to get there from here today. Yeah.
So you're Manitoba somewhere, right?
Quebec border, but yeah.
Right, went the wrong way. That's the extent of my geography.
No judging here.
Judge away, folks. I wonder what the Americans think if they're listening to this. This show's about Canada. You don't know where Kirkland Lake is in Canada?
Well, Ontario's pretty big. I don't expect everybody to know the little town I'm in right now.
When we were talking over lunch, so what I was trying to get to is I find a lot of investors are pursuing investments in towns that are based on natural resources, a lot of mining, oil and gas. Yesterday I had someone from Grand Prairie, Alberta. So that's, oil and gas. Last week, someone from investing in Sudbury, that's nickel mining. And I want to ask about what the investment strategy is for Kirkland Lake, because I think a lot of people will be running into a similar economy and in turn tenant profile and how they should operate their business. That was a long question. I got you back.
So,
yes,
it's funny because when we started investing in Kirkland Lake in 2010, originally Emmett and I drove up and we drove through the town. We're like, oh my gosh, there is so much opportunity here. They're like, there are so many buildings that are in rough condition. There are obviously so many owners who are really struggling. And that was just what we saw, was the opportunity to come in and to bring our expertise and, to bring some of our investor partners from down south and really be able to make a difference in a small town. And, we've taken a lot of buildings over the years and fixed them up, done renovations, taken uninhabitable units and turned them into homes for people. And that, I think, has been tremendously rewarding. And as a property management company, my philosophy is, in order to truly be able to serve a community, you have to provide a range of housing options. So we definitely have, more cost-effective options with, less bells and whistles. But what we've really specialized in, coming from Toronto and going up to a smaller community, what we've really specialized in has been, taking units and turning them into higher end. And higher end in Kirkland Lake is not like high end in Toronto. Higher end in Kirkland Lake is like if it has a dishwasher and a backsplash in the kitchen, it's higher end.
Are we talking about stainless steel at least? Not even?
No.
Gee.
No. So, and that doesn't mean that I wouldn't like to create that. I would, but there just isn't the demand for units like that. And I think that's important to understand in a community like this, is you have to follow the demand.
Right.
So for us, we have the ability to furnish or defurnish units at will. And we have a large storage facility, so we can pull all of our furniture out if the demand is there for unfurnished units. And if the demand starts increasing for furnished, then we'll furnish a bunch of units. I think it's important to have a really good understanding of what your community wants and needs. Like Airbnb or any of these other short-term housing providers, not really a thing up there. Like, they just call the local property management companies and say, hey, do you have a furnished apartment for rent? Can we take it for, we'll only do it by the month. But, we definitely offer furnished rentals by the month. And it really is about figuring out what the community wants and needs. And I think a lot of people don't understand that if you don't provide housing for the people who are in town to do business, then a community is going to dry up. So you have to have a range of housing available, right from, entry level housing all the way up to, somewhere for executives to stay when they bring them in, from wherever to stay for a period of time. So that's been, I think, one of the things that has really set us up for success, is making sure that we always offer a range and we have a number of housing options available. But
is the term executive rental, would that be the right term? Is there a term for this?
I call them executive rentals.
Okay. Can you break down? Okay. So if I was to buy a house today, Elizabeth.
In Kirkland Lake?
Yeah, Kirkland Lake.
Okay. Yeah.
Can you give me an example? Like what kind of property are we looking at?
It really depends. So there's houses, you can still buy houses for under $100,000 in Kirkland Lake. Now, they're not always, the biggest house. They're not always, they don't always have all the amenities. So I'll just give you an example of one. So we had one listed for sale. We had it listed for sale for $99,000. It didn't sell for whatever reason. I think, most people look at that. It's a 2-bedroom house. So when you have a 1 or a 2-bedroom house, you got less potential buyers, right? Which is why I always, if I buy houses, I'm buying at least a 3-bedroom. So again, these are learnings. So we had one listed for sale for $99,000, and it went through the summer. None of the locals bought it. Nobody wanted to live there, so we turned around and we furnished it.
And then what happened?
So we rented it.
To an executive?
Yes.
So can explain, because we were talking about this over lunch, so I want the listener to hear this as well. Like, what is the executive bringing their family? Are they just like kind of like a?
They just want somewhere to sleep while they're in town, and they go home to family typically. Now, there are some, we have had executives. We had, one of the mines brought an accountant up from Mexico, and he brought his family up, and that was fine. We don't have any issues with that. But most of the people who are renting furnished rentals from us, it's not with families and everything. It's they've left their family at home somewhere. They're used to working for the mines, which means they travel a lot. Mm-hmm. So we have this house, $99,000. We rented it for 6 months for $1,800. Not everything is like that. That
inclusive, right?
Yeah, that's inclusive. Yeah. But that's just us knowing our market, being able to identify a need, being able to pivot easily. And the thing is, there was tremendous backlash in, we have Facebook groups where people advertise properties for rent. And, there's a lot of people in Kirkland Lake who are saying, that's ridiculous. Not everybody works for the mine. And how can you expect people to afford that? And the short answer is, I don't expect everybody to afford that. This is a particular type of unit that is catering to a particular type of client. It's not meant for, a husband and wife and 2 small children. This property, quite frankly, is not ideal for them. There's no yard. There's no, so it explains why it didn't sell, but that doesn't mean that it doesn't serve a purpose. That there isn't a need for what we can offer at that particular point in time.
Mm-hmm. All right. Before we go further with investment strategy, can you give an overview of why Kirkland Lake? Like you touched on some of it already, but what economic factors makes Kirkland Lake a viable town for you to invest in? Because I don't want people to just go out there to the worst thing people could do is go to like a ghost town and wherever and everything's dilapidated. There's opportunity.
No, and I'll be honest. It hasn't always been smooth sailing between 2010 and now. There was a few years we went there where we were having to reduce. Units would come up and we'd have to knock $50 off or $100 off of the rent because we were at a period in time where there wasn't a lot of demand in that town, and that's always the risk you take with these smaller communities. Is that there's it's a smaller pool, it's a smaller market, and it's therefore impacted. When one employer does a layoff, it has a much greater effect in a smaller community, right? So the reason we went up there was because my husband, we had just gone through some training and education on the value of investing in gold and silver. So we thought, okay, well, we want to get into real estate. And we went, maybe it would make a lot of sense to go somewhere where they're mining for gold and silver, because as the price of gold and silver goes up, the demand for real estate in those communities is going to increase as well. Mm-hmm. So that was how we ended up there. When we got there, the numbers made sense all day long, every single day. Mm-hmm. And it's funny, like having grown up in Scarborough, when I got married, I lived in Newmarket. Like I had this idea of what small town living was like. It's not that. it's not what it's not a Norman Rockwell painting by any stretch of the imagination. The communities in Northern Ontario have had some challenges with drugs in particular in the last little while, and when you're in smaller communities, it's more apparent. But some of the heart and the community and it's just been phenomenal. Like it's really, and it's been a great learning experience for me, because as someone who was never an entrepreneur before, as someone who had always worked for other people, in 2005, I didn't think I'm going to become an entrepreneur. So I'm going to invest in real estate so I can be an entrepreneur. That was not on the radar at all. So, I've made some mistakes. I've made some business decisions that I'm like, wow, looking back, maybe I shouldn't have done that, or maybe I should have done something differently. But it's been a really great opportunity to be able to find my feet and figure out who I am.
So if you do it all over again, you do it again?
I wouldn't change anything. If I changed anything about my past, I wouldn't be who I am, and I wouldn't be where I am. We might not be here having this conversation.
I think the same way. But I would have loved to have bought Bitcoin at $200.
Yeah, but because you didn't do that, what other opportunities did you get in place of that?
I did a lot of real estate.
Yeah, and you might not be sitting here like you and I are talking, and you've got some pretty incredible things going on in your business.
I don't own Bitcoin for $200.
No, but you got a lot of other cool stuff.
When are you guys going to learn about the value of investing in Bitcoin? Because you did gold and silver. It's like some digital gold. I'm just teasing. It's like, because you're investing in a mining town. Like, and I'm thinking, oh, how do I invest in a mining town for Bitcoin?
Honestly, I really want to get stock hacking down. Emmett's super excited about stock hacking, because I think for him, it's a little bit for him, the real estate is the thrill of the chase. Yeah. So I think stock hacking would be like on a daily basis, the thrill of the chase for him. So I think that would be really exciting for him. Yeah. But I'm going to figure that out, and then can we talk about this? Like, can we talk in a year? We usually seem to talk every year or so.
It's just more like your schedule when you're in town. But
yeah.
We can talk more often.
Yeah.
We used to talk all the time.
I know.
When we masterminded together.
I know.
Every month.
I know.
At a minimum.
I know.
I tried to get back in.
Give me a little bit. I'll be back.
Take your time.
Yeah.
We'll always be here.
I appreciate that.
So how has the market behaved? How has small town Kirkland behaved in terms of like market appreciation? Did you, like, for example, a lot of small towns, like, well, the media tends to shine a light on these tiny towns.
Yeah.
All over Canada, just had population explosion.
Yeah.
Are you seeing anything like that?
Definitely. We're seeing, apartments go up for rent. Like, somebody gives notice on the 1st of the month, we list the apartment immediately, and, by the 4th or 5th of the month, it's rented. So we're definitely, so that would be like a negative vacancy rate, right? Like and there are times where we're going back to the tenant who's moving out. We're like, hey, if you want to leave early, we'll give you your last month's rent back, but we have somebody who really needs to, they're coming to town for work and they really need somewhere to live. So that is probably our biggest indicator of where the market's at. And it's doing really well. Mm-hmm. But we always lag a little bit behind. So when you guys started seeing the boom down here, it was a little bit before we saw it up there. You guys might be seeing, 30% appreciation rate, and, we might be seeing 15. Like, everything is just a little bit behind and a little bit smaller in the more rural. But, I mean, there just isn't any more land. Like, we're not making land. So it's always, in my opinion, it's always going to go up. There might be the blips in the radar, there might be the dips in the market, there might be the contractions, but in 10 years, 15 years, 20 years, a property is still going to be worth more than it is worth right now. And that's why fundamentally I believe real estate is such a strong investment. And that's why I believe it's okay if you want to buy 1 or 2, 3 properties a year and just hang on to them for the long term. You don't have to buy 30 to be successful.
Couple questions to ask. Sorry, when you talked about Kirkland Lake, are people moving in from out of town as well? Like, do you have is the population growing, for example?
To some degree.
getting like people from Toronto. Like, I sold my house in Toronto for $2 million and I'm moving here.
We're not seeing that so much. Like I know there's a lot of the other communities like, you know, Belleville and some of the other ones, you know, Cambridge and that kind of stuff. They're seeing the people moving out from Toronto. We're not really seeing that. But what we are seeing is that demand is increasing. You know, the mines are doing really well. They keep finding more and more gold. And
good problem to have.
Oh, absolutely. There's talk. So a couple of years ago, Kirkland Lake Gold, well, they just merged with Agnico Eagle, but they announced a $320 million investment in building a new mining shaft. So they aren't even finished that yet, and they're talking about they've found more gold and perhaps a shaft 5 opening.
Where's all this gold going? Because Canada doesn't own any. I mean, the government of Canada.
No, they don't. People are buying it.
I know people are buying it. Americans, China, Russia. Of course people are buying it.
Yeah.
Just not Canada.
And the interesting thing is the cost of pulling gold out of the ground per ounce in Kirkland Lake is extremely low.
Oh.
So you look at all the mines and the cost per ounce is
Right.
is Canada, the KL gold sites are you know, the top.
Right. So then it's more profitable business.
And it means that even if the price of gold goes down, they're much less likely to close up or to stop pulling gold out because they have a much greater profit margin to work their way through than anybody else.
Yeah, I don't see gold going that low.
No.
Not going up like Bitcoin though. Folks,
Honestly, I don't know much about Bitcoin. If I bought
can talk more
anything,
offline.
it would be about you telling me, okay, go buy this.
We'll talk more offline. A mutual friend of ours bought back in like 2016. I'll tell you afterwards.
Okay, sounds good.
So they got it for like $200-300
Wow.
a coin, and today it's 61,000 US.
Is that all?
Is that
Jeez.
all? See all the things we missed out on. Okay, so like your investing is different than mine. It's totally okay. I
Absolutely.
believe everyone should invest. Like even if you get it wrong, at least you'll learn from it. Lots of people get it wrong at the beginning, but anyone who sticks with it will learn and get better as long as they're willing to learn.
Can I jump in for a
Sure.
second? So most people don't get into real estate because they're afraid of making a mistake. So if I told you you could spend $10,000 and not make any of the basic entry-level rookie mistakes because you've got someone who's going to help you, would you spend that $10,000 to not make the $100,000 mistakes?
Yeah.
So that to me is the difference between people hiring a coach or getting, you know, some level of education versus people who don't.
Yeah.
That's literally, it can make a huge difference. Like if you invest $10,000 in your education, then you're eliminating, you know, 80% of the mistakes that new investors make.
Mm-hmm.
If you want to take action and do it, then do it.
Just a quick story to share. I remember people I met at a real estate thingamadealy, and they're all gun-ho, and they heard one of the good things to do is go directly to the sellers to buy properties. So they did that. They went directly to the seller.
Mm-hmm.
They bought a triplex or something like that. And then when they owned it, they found out, oh, there's all these problems. It's not a legal triplex.
Mm-hmm.
And they found out how much it cost to replace a fire escape.
Mm-hmm.
So there was a $60,000 bill that had to be done immediately because the home was not safe, as deemed by the fire department. And but we saved the realtor commission. Because if they had hired me, I'd like, that's a $60,000 fire escape you have to replace.
Yeah, absolutely.
But they saved the real estate commission.
But that's the difference between, you know, surrounding yourself with the right people and the right knowledge and the right information and trying to go it alone because you think a couple of $1,000s in real estate commissions or coaching fees or course fees are better spent elsewhere. It's a huge difference.
Silly people. Oh, and they took it so bad because they sold them for pretty big losses.
That's unfortunate. I hate hearing stories like that. Because the thing about real estate, too, is sometimes if you can just find a way to hang on to it, you can recover a lot of those losses.
Yeah, that was a messy one because the fire department's on them. They had immediate things they had to do. Their only choice really was to go to single family.
Yeah.
So the requirement for the fire escape no longer existed, and then take it off.
Right.
Right. They just trash it versus having to try to build a new one properly.
Wow.
Right. And it wasn't in a good area. So.
And it always makes you wonder what the highest and best use for that property is too, right? Like I love looking at stuff like that and saying, okay, if it doesn't work like this, could we do this or could we do that? Could we bring in a private loan and fix it up and reposition it? Could we, knock it right down and build like what are the zoning? Do you know what I mean? Like I love looking at stuff like that. It's a puzzle, right? And you just have to figure out what the picture looks like at the end.
Yeah, it's a 100-year-old house. Lots to do.
Yeah.
I should just bought something newer. Less old. Less old is a better word.
Less old.
Less old, yeah. Like buy something that's 50 years old versus 100.
Yeah.
Big difference.
Yeah.
Who is a candidate for coaching? At what point should someone start with a coach?
I think it really depends because I find there's sort of two waves of people. So you get the people who are starting out who are like, I don't own any property. I don't know what I don't know yet, but I know that I don't want to make mistakes, so I want to hire a coach. So that's sort of the people, the first wave of people. The second wave of people is, I own some properties, I've made some mistakes, I want to continue to grow. A lot of people come to me because they've maxed out on financing and they're like, you build a portfolio, how did you do that? Or I need to start working with joint venture partners. I need to start finding private lenders. How do I do that? So the people who already have experience typically are coming to me with a very specific problem or challenge that they want some help with. And other people come to me because they're like, I'm just overwhelmed and I don't know where to begin and I don't know what I don't know. So help me do this in a way that's going to make sense.
Right. Because at a minimum, you can review deals for people.
Oh, yeah. And I certainly do that as well. But a lot of people don't realize sort of the fundamentals you need to have in place. It's like they start throwing up drywall without having the studs in, right? So you need to... You don't want to build a house like that because it's not going to stay around long term. And it's the same thing when you build a portfolio. Why are you laughing at me?
Well, it's just like, because a lot of investors want to do work without permits. Like at times you don't need permits, but if you're going to do that, go get a permit.
Yeah, no.
Have someone inspected.
I never believe in cutting corners like that. I don't believe in saying that you're going to live in a property so that you only have to put 5 or 10% down to buy it. Like, I don't believe in any of that stuff. I feel like your reputation, even if it's just you right now, in the future you may want or need private lenders or joint venture partners. I wouldn't compromise my ethics or my integrity just to get a deal done. It's one deal is not worth it. There's a million others out there. Mm-hmm. And that I think is a big thing, that the scarcity mentality, right? Is, well, I have to do this deal and I have to make this happen because I'll never find another one. No way. There's so many investors. There are so many deals out there. You'll always find something else.
There's a lot to say there. What kind of, this is the challenging part with investors is their expectations are all over the place. What they're capable is all over the place. So let's go here. For example, I was interviewing a young gentleman yesterday. He lives in Grand Prairie to work and he house hacks and he rents to people out in the oil and gas industry, right? Mm-hmm. Then I asked him, where's your next investment property going to be? He goes, I'm going to invest in Kelowna where I live.
Yeah.
Right? Very, very different to be in Kelowna, BC versus Grand Prairie.
Yeah.
Right? To the if you're a listener from Ontario, it'd be comparing like investing in Mississauga versus small town Ontario.
Yeah.
Right?
Kirkland Lake.
Right? Yeah, potentially like that.
Yeah.
Because one's an equity play.
Yeah.
One is largely a cash flow play.
Yeah.
What investor should be going for a cash flow play? What investor should be going for an equity play?
So I believe that the biggest determining factor of each is largely based on your income goals. So if you are looking to leave your job within the next couple of years, you need to be looking at strategies that generate cash flow for you. Mm-hmm. So whether it's, multi-unit apartment buildings or whether it's, rent to owns or, the BRRRRs generally, by the time you refinance, they're not generating fantastic cash flow. So that's where you're looking at your flips and those kinds of stuff where you're generating cash flow consistently and rapidly. Mm-hmm. Whereas the equity stuff, those to me would be more if you're, long-term retirement planning Or maybe you want to, like I have a couple of clients I'm working with right now, and they know they want to retire in the next 7 to 10 years. So our goal is to buy, properties in markets that have good appreciation rates, not because it's going to give them income every month, but because in 7 to 10 years they will reposition, they will refinance, they will pull a chunk of money out of it, and they will deploy those funds, whether it's through private lending or whether they'll start doing some more active strategies once they've left their job. But it's really typically a trade-off of time versus money. So the more time you have available to you, then the more freedom you have, right? The more opportunity to look at different strategies.
Because like you said, the cash flow strategies are all rather active.
Yeah, I mean, there's very few, I can't think of any strategies where if you want to generate cash flow, then you don't have to put any time in. Like really, I mean, I guess maybe private lending might be a good one where you don't have to put in much time, but it still generates a solid return every month. But you don't have, all the benefits of long-term appreciation and everything else. So, I mean, flipping, that takes time. BRRRRs, I mean, while you're doing the renovations, that takes time. Short-term rentals, you can build a team around you, but you still got to manage the team.
Yeah, and the PM deservedly takes 20%.
Oh, absolutely. And even student rentals. I mean, student rentals, I'm seeing 20% management for student rentals too. Why? Because they're so time-consuming. So we're always trading time for money. The question is, which do you want more? What do you want more?
I don't have time. That's why I'm buying turnkey duplexes.
So you want more time.
Yeah, I don't have time. Right. And that's the most finite resource for me. See? I have finite mentality.
Yeah.
I'm just joking. Yeah.
So you would like to choose investments that give you back time. And that's why you buy turnkey.
Take limited time.
Yeah.
Take very limited time. The hardest part up front is the financing.
You're self-employed. Of course, it's the hardest part.
with the number of properties, that is by far the hardest part. Like getting a tenant, the renovations, like none of that's all very easy.
Yeah.
And low risk relative to getting the financing.
But you showed
for our experience, where we are in our lives.
Absolutely, but you've showed really good alignment and decision making where you've chosen an investment strategy that helps you, that furthers you or gets you closer towards your goals. Which is really good. And I think that's where a lot of new investors struggle is, there's something becomes popular because, there's a super hot guy who's, has a TV show about it and everybody's like, oh, this is what I want to do without knowing and understanding what that actually translates into on a day-to-day basis.
Yeah, because I've done those projects. I did a project, it was like 120,000 reno, probably cost more than that. But it was like, basement was moldy, basement was leaking, knob and tube wiring, tons of work to be done, right? That took a lot of time, not just money. If it's just money, it wouldn't be a problem. So here's a check, go.
Yeah.
But no, it took a lot of time, our time, to go deal with and follow up and chase and stuff.
Absolutely. Yeah. And I think...
And that's okay for people just know that's what it... I almost sometimes say you're better off not knowing how things can go wrong.
Yeah.
You need a little bit of ignorance to get into it. Because if everyone knew how challenging it can be at times, then they probably wouldn't do it. But the thing is, after like a sample of like 5 years, it's worth it, right? If they run into an early problem within the first year, then the worst thing you can ever do is give up, right?
Yep.
Yeah. Sorry, I cut you off.
No, I was just going to say, I think that's part of what we're seeing a lot more of in Kirkland Lake in the last year or 2 years has been a lot of investors coming up. They're like, we don't have the ability to go back and forth. We're like, absolutely, we got you, no problem. So, Emmett is a fire prevention engineer, and he does all the building permits for our owners. He manages all the construction, he pays attention to all the details. Sends reports. Here's photos. Here's what happened this week. Here's how everything's moving forward. So if you really are committed to a strategy like a flip, then like you said. If you don't want to have to put in a significant amount of time, then you just have to find the right people. I love that.
But you found yourselves. That's how you start your property management business.
Well, yes, that wasn't how we intended it to be.
You couldn't find a property manager.
Yeah.
So that's actually something I teach new investors is they would, for example, they'll say, hey, what do you think about this town? I said, first off, like I just been around for a bit, so I know like that town. I know a lot of investors had troubles with property management.
Yeah.
So if you're going to invest there, have three.
Yeah.
Have three that you would hire.
Yeah.
Right? Because like, why do you need three? Because you're going to fire at least one of them.
Yeah.
So then you need a backup.
Yeah.
And there's a chance you might fire that second one.
Yeah.
So you're going to need the third one. But
Yeah.
you guys went straight to hiring yourselves.
Well, no, we had other property managers, and I think we had 3 or 4, and we just, I don't know, maybe our expectations are too high. I'm not sure, but we just knew how we wanted our tenants to be
Right.
managed. You know, we didn't want somebody showing up at the door on the first of the month, you know, going around door to door collecting all the rents. We felt that was very dangerous. You know, we wanted tenants, you know, if there was a problem like dog poop in the yard, we didn't want somebody who just, you know, would just show up and like scream at them to fix it and leave again. Like we wanted, okay, here's an official notice. You know, the landlord tenant board is more and more and more present. More and more people are aware of it. So, you know, things need to be documented. We wanted to be able to see what was going on in our property. So we picked Buildium as a software in order for us to be able to not just manage the properties, but also to give our owners and investors insight into what's going on in their properties.
4 property managers you couldn't work with. And I'll make the point that like there's massive ROI from good property management, right? You screen well, you treat your tenants well. Like these are customers that pay a lot of people, you know, even your cheaper, like you're the executive rental, I guess paying you over $20,000 a year in rental income. You know, for any small business owner, how would you treat a customer that pays you $20,000 a year?
Oh, absolutely. They are going to get, you know, white glove service. They're
Yeah.
going to be treated really well. And that's, I think the challenge is that, you know, the whole landlord tenant relationship has shifted and it's become, you know, what do you owe me and what do I owe you?
Yeah.
And it really should be about, you know, you're my customer, you're my client, and I value you.
Yeah.
And then you treat the good ones well, and the ones that aren't so great, well, you help them find reasons to move on.
One of my tenants emailed that his lawnmower broke, so we really need to get him a new one. He's always paid on time for the last 4 years. I'm like on Lowe's website, what lawnmower's on sale? When I should just be, hey, go pick one.
Yeah.
Pick whatever you want.
But then it comes back to a cost-benefit analysis too. Like, how much is your time worth?
Yeah.
And would it make more sense to say, hey, you know what? Here's a budget. Go find whatever you can. You know, spend up to this. Do you care where he buys it from? No. Like, send me the receipt.
Yeah.
And let him go and do. You know, maybe he has some bells and whistles he wants. Maybe there's something special. Maybe he can find a deal, and you know, he can buy a weed whipper at the same time. Like, it doesn't make sense for you to be the person who's doing all that, because that's like a $25 an hour activity. So give him a budget, let him do it, and tell him what you need for the accounting on the back end.
That's pretty dumb of me.
Well, this is where it comes to, we're making emotional decisions, right? Where we think that we have to do things. And
Yeah.
the reality is, when you read Who Not How, a lot of times there's people who are better to do it than you are.
Yeah, it's pretty dumb of me to be going on Lowe's website and trying to find what's on sale.
I didn't say that. I'm not judging you.
This is my cheapness that's overruling. Very good use of time. So that's thank you for sharing that experience with having to go through property managers. Because again, like I don't think anyone should invest in the city unless you can find quality property management. And one of the mistakes couple of mistakes I find with property managers, some of them charge way too little money.
Yes.
I think I've said this to almost. I think I've said this to almost every property manager except for my own. They don't charge enough.
Well, that's it. The margins on property management are really thin. So when I have clients who come to me and they're running numbers at 5%, I'm like, you know what? Honestly, like, I'm a property manager. I know what it takes for me to stay in business and to, you know, run a legitimate business, to have, you know, the proper insurances that I need to have to, you know, be able to support the software, to have the staff, to be able to maintain my reputation. Then I can tell you 5% is not enough.
Mm-hmm.
So I'd rather pay someone 10% to get things properly managed so that I legitimately don't have to do anything in my business than pay someone 5% and have to keep checking in and following up and looking over everything they're doing because they really aren't charging enough for their services.
What do you see as ranges for property management for like a single family home then? For the beginner investor, what would for single family or duplex, what percentage should they expect to see?
It really depends on the market that you're in. I don't charge any less for more or less units. Like we're just 10% across the board. I know that there are some companies that offer discounts as you have more, but the way I look at it is if I'm managing 8 units for you, if I'm managing 80 units for you, I'm not treating it any differently. I'm still paying the same number of bills for you. I'm still, filling, I'm still filling a unit and giving the same amount of time, care, and attention to selecting quality tenants. I'm still communicating with the tenants in the same way and responding to everything. So I mean, I guess it's sort of like the difference with snow plowing, where you have some people who will say it's $50 every time I show up and plow your snow, or you say I'll charge you $500 for the season. When you charge $500 for the season, at the end of every season, inevitably one person came out ahead or one party came out ahead and another party lost. So either the person doing the plowing didn't charge enough and is in trouble and might not be back next year, or the person paying the bills could have paid less for the actual services that was provided. And my preference is always just to pay what people are worth.
Yeah. Because again, go back to the tenant that's paying you $20,000 a year.
Yeah.
If you went to a restaurant and dropped $20,000 a year, what kind of service would you receive? What kind of service would you expect?
Absolutely.
Right? It'd be over the top.
Yeah. If you went to a hotel in Vegas, what would you get?
Yeah.
Yeah.
But you drink for free.
You'd be a whale.
Yeah. Not a good investment.
No.
It's a terrible investment. So Elizabeth Kelly, we're running out of time. I always like to give my guests free time to share whatever they want to share, get whatever's off your chest, or words of wisdom, a quote that's really rung true with me. Sorry, rung true with you. Lessons from the pandemic, just some ideas, anything you want.
Wow. We've covered so much, and we've really kind of gone deeper than I thought we'd be able to into some of the stuff. Some of the stuff that I think is important. I think if I had to talk about one thing I think we need to do less of in 2022, it's compare ourselves to everybody else. Assume that, what we see on social media is somebody's real life, and then feel like, we have shortcomings or failings based on that. I think if we're adopting the infinite mindset, then we just say, how do I find the people who are on my team that are going to help me be successful? And really focus on what our success looks like and not worry about other people and what they're doing.
So we were talking before we were recording. I was talking to you about Annie Duke's book.
Yeah.
Have you read it?
I have not. I would love to.
You'll
though.
like it.
Okay.
There's a part in the book where she talks about the largest determining factor of whether or not someone's happy is in comparing themselves to others.
And what does she say about it?
She's really just quoting a study.
Okay.
Right. And to figure out how, so here's an example. Here's the example question. Would you rather make $70,000 today or $70,000 100 years ago?
Interesting.
Right, what's your answer? And then for the listener, before Elizabeth answers, everyone on the show listening, all 12 of you, what is your answer? Would you rather $70,000 of income today or $70,000 100 years ago?
I think
say $70,000 per year.
I would have picked $70,000 100 years ago.
Right. What is life like 100 years ago?
Oh, it was tough.
Right.
It was really tough.
What do you think life expectancy was?
It's definitely shorter than it is now.
Right. How easy is it to get clean water?
Yeah. No quality of life 70 years ago, unless you were really rich.
Right.
100 years ago, yeah.
No Apple Watches and diamond rings. Or glasses.
Yeah.
Right.
Yeah.
Right. Crazy, eh?
Yeah.
But if you made $70,000 100 years ago, you're
rich.
You're richer than the king, probably. Yeah. But your quality of life.
Yeah.
Right. Interesting, eh?
That's really neat. What about you? What would you have said?
Well, knowing if you think of it that way, I'd rather today. Because life is good today. Right?
Yeah.
Like, especially looking at it as a Canadian. Free healthcare,
Yep.
My life expectancy is like 77.
Yeah.
Right? Depending on who wins the next election, we'll probably have free dental, free pharmaceuticals.
Yeah.
My smartphone. I can argue with people from different countries in the world. Right?
Yeah.
Look at our quality. Look, I have a dishwasher that's stainless steel.
But let me ask you that then. If everything is better now, then why do we have like the mental health issues that we have? Like they're talking about anxiety in children being off the charts. So what is it about society now and our world now that like, did they always have it? Did children have anxiety 100 years ago and we just didn't know? Like, there's a lot of other health measures that maybe were better back then. Things were simpler. There were less expectations. There was less pressure. There was less stress. There was less workaholism.
It's just, so one of my beliefs is that things are much easier today. That's why we have, so for example, I come from a family of immigrants. Just 2 generations ago, food risk was a major issue.
Yeah, you're
not being able
consumed
to eat.
with
You're consumed with
finding food,
hustling for food, or growing food. When you're that razor focused, you don't have time for anything else. Right?
I wonder too if it had something to do with if you're growing your own food and everything, you're much more active, whereas as a society, we're in general more sedentary now.
There's also that. One of my neighbors is a child psychologist in the public school system, and I don't think this gets talked about enough. But he says, drug usage is way higher among kids, like Riddle and stuff like that. But what else is higher among kids than ever? Screen time.
Yes.
Right. Versus I don't allow my kids any screen time. Not none. But they might watch an hour a week.
That's impressive.
Right. And I choose it. Right. Their choices are limited. Right.
How do they feel about that?
They love it. They read books instead.
That's awesome.
Right. So again, like I'm just making conscious decisions to be proactive. And it's hard. Admittedly, it's hard. Ask any parent. It's just hard to keep your kids off screen time.
Yeah.
And I'm not judging. Like I have a nanny that helps. Right. That's how we make it happen. But no, I think a lot of the mental challenges come from just like if you do accept what's coming in. Say you watch TV all the time. Say you watch Fox News all the time. You're gonna be angry, right? You read certain media. You read any mainstream media. Often they're trying to scare you, right? So are you not surprised that people would be
fearful?
Right?
Absolutely.
Fearful, upset, because media like all sorts of stuff is just trying to trigger you. Right, because that's how the media makes money these days. Because since they can't sell, they don't have classified ads anymore. They can't sell advertising. Right, the internet destroyed those businesses. That's why they're all focused on triggering you. So yeah, can you see why? And then again, Facebook, Instagram, like they know, and it was just in the news last week. They know they're not healthy for people.
Yeah.
So maybe look away.
Yep. Absolutely.
Right? So I think that's why. I think it's simpler than we think it is. The problems are simple. I wouldn't say simple, but put the phone away.
Yeah, it requires discipline.
Yeah, open a book, go to the library. It's free.
Yeah.
Right?
Go enjoy nature.
And there wouldn't be libraries 100 years ago either.
Yeah.
We wouldn't be driving to Kirkland Lake.
Well, you might, but it would take a week, not a day.
Elizabeth Kelly, thank you so much for coming on.
It was my pleasure. Thank you so much for having me.
Driving all 7 hours just for this show, and then leaving immediately after for 7 hours. Thanks again.
Thank you. It was my pleasure.